just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see? I just wanna be free.
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith. And as you can see, this is a premiere, episode 197. So big up yourselves for being here. Whoa! And we have a special guest because, as y'all see, it is the end of September, but I could not give you guys something about Life Insurance Awareness Month. So I had to bring on a special guest. So big up yourself, Andrew Stewart.
Welcome,
What?
welcome, everybody. Thank you, Camille. Thank you.
It's an honor. I I was a little frantic. I was like, no, I need to have someone on for like this month. And when did we meet? We met. I know we have been IG,
IG, Facebook.
IG,
We've met online. We've been in each other's sphere for a
right?
while now. I've been seeing your content. You've seen a little bit of my content. We do a little book comments, likes, and all that type of stuff.
Yes,
But then I think we saw you at Christopher
Christopher
Lawrence's
Lawrence.
event.
Yes, big
Yeah.
up Christopher Lawrence. Whoop 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 whoop. Yes, we met each other exactly. It was like we saw each other twice. So we're
Mhm.
gonna talk about the one where it was like a milestone. You know,
The
the
big one.
fifth anniversary, and I wanted to have like a battle of the insurances. And you're like, yeah, I'm down.
I'm
Whenever,
howdy. Let's do
whoever you
this.
want to bring to the ring, let's go.
Let's
And
do
I was like,
this.
all right. But you know, it's okay. People are a
The
little.
opponent or the opposition or what are we gonna call it, the other candidate said, nah, let's just keep it friendly. It's all love. It's all love. It's
Peace and
all
love.
love. It's like, Mondat. Yes.
So it's like,
War.
it's gonna happen soon, and it'll be like you and others and things. So
Right.
I'm excited for it. But you know what? I want the folks to know who you are. Who is Andrew Stewart?
All
Who is?
right. All right. So small version or short version. So we'll start with the family. So I come from a big family. There was 8 of us growing up. Both my parents were pastors, so grew up as a PK. Take that as you will, but that really set the foundation of community, what it meant to be a part of a group. Really putting in that helping others mentality, and
Mhm.
then from there, that made me obviously growing up in the church. You have to be on your kind of your P's and Q's most of the time. And so
Indeed.
that made me curious about the world, right? And growing up in Ottawa, small town, I'm not afraid to say I made some poor choices. Um, and then I decided to broaden and spread my wings and move to here
Whoa.
in Toronto, right before Y2K, right? I don't know if you remember the hype around Y2K when the whole world was supposed to be coming down to an end and everything was supposed to reset to zero. But anywho, moved to Toronto.
Yeah.
And that's where I really set the foundation of my career path.
Okay. So
Yeah.
how did it feel coming from Ottawa to Toronto? Because I know like a couple people that have done that as well, and they're like,
Mhm.
yo, Toronto is a busy, fast.
Well, for me,
Mm.
because I felt stagnant in
Oh,
Ottawa and it
yeah.
felt slow to me, and I was seeing the same people all the time. No matter you go to the store, you see the same person. You go to the clubs, you see the same group of people. So when I came to Toronto and saw the lines on Richmond and on King, my eyes went like this. I was like, oh, Black people.
You're like,
I was like,
I'm in
okay.
heaven.
Challenges navigating, obviously, the city and learning, going from just a place that just had buses to a place that has a subway and a true downtown and an uptown and a east and a west and all of that. Well, that took some getting used to, but I was all excited.
Okay. So a pastor child getting into the finance world.
Mm-hmm.
How were you able to merge from being a pastor's child? Because obviously it's about the community, and I love that you said that first.
Mm-hmm.
What made you want to get into the financial world?
That's a good question because I don't think I wanted to get. I think it found me.
Oh, okay. Okay.
Two things, and I can remember these things just as a child, right? One, tithing. That was basically engraved in us the purpose and the benefit of tithing. And then two, even as a child, my savings, I always had this little copper piggy bank, and I would get my coins and throw my coins in there, and it would fill up fast. But on every Sunday, like clockwork, I would kind of empty that piggy bank and count how much I had. And eventually it got to the point of counting out each denomination, putting them in the rolls, and I would have stacks and stacks of rolls of nickels, dimes, quarters. So
you're aging yourself.
At an early age, I was infatuated with money.
You're aging yourself when you're talking about those.
Those right? I don't care. They look good though.
Hey, big up yourself, boy. Especially if you have the paper ones.
Yeah, those stacks to put,
The paper ones or the plastic ones?
And then the plastic ones. I didn't like the plastic ones. I was a paper. I preferred the paper one.
True, because you didn't want people to see.
So I guess my infatuation, but I guess my curiosity with just finance and money itself started at a young age. And that it eventually grew into my mom started opening up my own bank account and me having my own bank account and then making my own deposits and then just watching my money grow in my account. And I'm going to do something else that's going to date myself. Remember when you had to go to the bank and you had to print out your passport book?
So if anyone has that, I want y'all to show it.
If I could find my old Scotia Bank passport book, I'm sure that's worth money sometime. I'm sure that's worth some money in some type of,
right? Jeez. And you know what? The one thing that I'm loving is that your parents were able to show you that importance of personal finance or financial literacy. That is one thing I know, like in our community, it's a little bit tricky. So bless your parents, Bless your parents.
Yeah, and I'm going to say, really I'll add something to that. I don't know if it was so much the literacy part. It was just habits that they picked up, right, from the teachings of the Bible that they studied and just habits of them growing up in Jamaica. So it's not like they ever sat me down and said, hey, this is credit, this is a loan. They didn't do none of that. So the literacy part wasn't there. It was more so just general habits and beliefs and things that they believed in.
General habits and beliefs. And that's really important. That is really important. And then, so fast forward from learning that. So when did you, so wait, where did you go for school for? See, now I'm getting all up in the, whoa, see, a CPA type of thing.
Not even, I dropped that like a bad habit.
Wait, now the question is, because I was in accounting too, and I switched quick to finance. Which course made you change your mind?
Oh, you're trying to make me go back into the Rolodex? Back then it was just all accounting 1, accounting 2, accounting 3. right? So
Okay. Okay.
all I know is that when it got to a certain point where the numbers were this long,
That's
and
really like
it's
for
just
me
like
it was auditing.
it was auditing.
Yeah.
Okay, yeah,
So what yours has got
yeah, yeah. So you know, that's when I said maybe that's not. I still had an interest in it. I still am glad I took it and understood the fundamentals
yeah,
of certain things. But when I actually looked at lifestyle, it
yeah,
didn't match kind
your
of
life.
where I wanted to be. Um,
Okay.
so moving here,
Mm,
um, that's when you move here. You try to look for something in your field, but the only thing that I could find at the time was call center jobs, right?
indeed, indeed.
But I'm
I
not mad
love.
at it because that really gave me the space to hone what it meant to try to build a relationship out of nothing
Yeah.
on the phone and
Hmm.
have a process and a methodology of what you're trying to get across to somebody. Uh,
Hmm.
right. So I think anybody who has call center experience, you could tell how the level of how they communicate as opposed to somebody who doesn't, in my opinion.
True.
Um,
Depends
right.
which call center.
Well, we all went through all of them. Everybody did the circle of call centers. I don't know. I don't care who you say you are, whether you are Rogers, Sprint, you did all of them.
Credit collectors. The credit collector ones are the demon ones, yo.
Yeah,
Because they're
actually, I'm lucky.
told.
I never fell into that category. I'm happy I never fell into the collection
Because you'd
category.
have to have a certain sternness and stuff, and it's no joke. You're like,
Yeah. Yeah.
dang, why are you talking like this?
Mm-hmm.
Okay,
Mm-hmm.
so okay, call center, counting, dang, and then now becoming a financial advisor or planner.
Advisor.
Okay, advisor. So boom, so advisor. So how who sparked your interest with that? Because we know about accounting.
Yeah. So after going through the customer service type roles, and then I got into insurance. So
Okay.
eventually I started crafting a career in
Mm,
insurance specifically. But again, it was still very much in the concept, the call center space with carriers, and to that nature. So
mm,
broadening my financial acumen and what is a risk, what kind of companies are in this space, how much money they make, what kind of career path you can have.
yeah.
So I first started in calls, and then I became a broker in the
Okay.
auto and home space. And then from the auto and home
So
space, I went to commercial.
I'm
So
glad you're not in that one right now because what's happening?
yeah, it's kind of brutal. It's kind of brutal. But I think it was much easier back then because
Yeah.
it was back then it was more of like your local broker, your family broker. It was
Yeah.
positioned that space. And then I got into commercial insurance.
Yeah.
And then from commercial insurance, that's when I got into mortgages. So
Okay.
the reason why I went into yeah, so well rounded. So
Hmm.
the reason why I went into mortgages because I was tired of
Hmm.
the corporate setting.
Okay.
And somebody said to me, you know what? Try to go out on your own. Try
Yeah.
to eat what you kill. Is exactly what they say.
Hey,
You know what I
like a
mean?
true
Instead of just
hunter.
right? Instead of relying on somebody else to feed you, because what would end up happening is that it would go through a downsizing, then you'd have to find a job, go through the whole interview process, go through the downsizing thing again. So that whole cycle, I was getting tired of it. So I
Yeah.
said, let me try this self-employment thing,
Okay.
and jumped into mortgages.
Mm. So wait,
Right.
what is the meaning? So DF Insurance Solution. What is the DF? What does it stand for? So the
Well,
people know,
the,
because they
the
know it's a
the
secret
D.
sauce.
So when I first started, I guess my own business in this, I
Yeah.
went by Drew Financial.
Okay. Okay.
Right.
Makes sense.
So
Makes
right,
sense. Okay.
it was very me centric. It was all about like, what Drew can provide for you, and then financial, right? Obvious words, but
Yeah.
then I wanted to get more specific because you can't be, an expert in everything finance. You could be well-rounded, which I was, but
Yeah.
didn't really tell people what I did and what I focus on. So then
They
I
always
kind of,
get confused.
right? And so, and it kind of made me feel like I had to touch on everything
Mm.
that's in the finance world. And then it was daunting. So then, I kind of did a survey to the people who knew me, knew my business. And then I just, honed it down to DF,
Yes.
insurance solutions. So that's how
Okay.
the D is for Drew. And then I kept
Mm.
the F for finance and then insurance solutions.
Nice. So I can't have Dr. Vibe hear this because you did a survey. He's been telling me to do a survey. I'm like, okay, okay. So now you're well rounded when it comes to insurance. But when it comes to life insurance,
Hmm.
what do you what do you want folks to know about life insurance, especially during this month? And you've been doing it already. I've been seeing the posts and stuff. So
Hmm.
it's some good content, you know.
Thank you.
But
Thank you.
what's a couple things that you'd want folks to know about insurance, because there's still like a misconception about it. Which one should they choose? Should they get term, whole? Like, what's a great way to get folks to understand the importance of life insurance?
You see, I've come across that question in different ways where some people have no idea, and
Mm-hmm.
some people don't believe in it, right? So if you don't believe in it, then the only thing that I usually tell people is do some self education, right?
Mm-hmm.
Talk to people who have lost somebody and if they've had life insurance and or if they did it and what kind of challenges that their beneficiaries or the people left behind had to go through. So to me, it always has to start with what's your belief level in what it can do, not the product itself, but what it can do, and then clearly define what you want it to do for yourself. So that allows me to now come to a very, very neutral and common ground to say, okay, what is it that you want out of this thing? And
Mm-hmm.
then we can have conversations about, all right, what's the best type to
Yes.
achieve what you want out of it, right?
Mm-hmm.
So I'm gonna say the proverbial. It's different for everybody, right? So
True,
it
true, true.
it really is. So if somebody asked me what type,
Mm-hmm.
I would have to go about a whole kind of fact find situation of, well, what is important to you? Do you
True.
have family? Are you single? Are you earning an income? Do you have debts? Those type
Mm-hmm.
of fact find questions to say, okay, well, that allows me to kind of help you figure out which type would be best for you. But I think if a lot of people just kind of did some self education first,
Yes.
have some educated questions, and then two, choose the right advisor, right? Because if you can ask an educated question to say three different advisors and just
Mm-hmm.
gauge the different answers that you get,
Yeah,
right? That's a good way to find out who you want to work with
that's
and
true.
then who's knowledgeable and then what kind of things are actual factual.
Yeah, and I find that's true because I know there's, certain folks that say, "Oh, this is good," or "only this is good." And I think it's always great to be not take one side. It's just to, like,
Mhm.
be well-rounded. Like, hey, if this works for you, cool. If this works for you, cool. It's all based on their lifestyle, ideally. The one thing I want to ask, and this is a question, two questions I've been asked recently that I just remembered. So if it's a single person, there's no dependents, why should they get life insurance? I know it sounds like a silly question, but sometimes they're like, I don't have like anyone like to
Mhm.
leave things, but I know how to answer that, but I'll see what you say. Why should a single person, no pick me, no nothing, should get life
Mhm.
insurance?
Well, it's one, two. So the first one is how liquid is your estate then? So if you
Mm,
have assets and you've accumulated a house, you have a car, you may have debt, you may have credit cards, you may have loans, you may have done well for yourself, and you may have multiple properties, whatever it is. I was going to ask you, okay, well, how liquid is your assets to pay taxes. Because
Mhm. Mhm.
if it's not about leaving it to somebody, somebody's going to be there with their hand out, and that's going to be the tax man.
Exactly.
So, and then two, it's going to be about, all right, well, somebody's going to have to handle your affairs,
True.
and either a they're going to have to liquidate. If you don't have
Mhm.
much, if you don't have much of anything, then the answer could be very simple: you don't need it. You haven't bought a house, you haven't done anything. So if you don't have much of anything, and it's just
Yeah.
you, and you're just living off the income that you earn, then technically you don't need it,
Oh
right?
shoot! This is the first time I've heard this answer. Okay.
Right. But if you have
Mhm.
done something and you've
Yes.
accumulated and you've done things
Yes.
that warrant the tax man knocking on your door, then that may be a reason why you might want to buy insurance. Second,
Okay.
it could be one way that you may want to donate if you want to have your name up on a plaque for sick kids. I have
Yes.
one client who's single, female, can't have kids, won't have kids,
Mm.
lives by themselves, and their biggest thing was, I just would like to donate a large sum of money. Well, an insurance policy is a way to do that without you having to worry about where it's coming from. So again, insurance to me is, if you look at it as a way of just getting a large sum of money for pennies
Mhm.
on the dollars, then you can think of where you would want to put that money. So
Yeah.
it's not so much why you need insurance. It's just like, well, where would you want to put a large sum of money? Towards
True.
something or pay off something. It's up to you.
Okay. I like that way of thinking because I think the most part what happens is that we usually have the scared tactic
Mm.
to get people to get it, and I
Well,
think
death.
that too. But then also, I think the biggest thing I've acknowledged when it came to death is GoFundMe. And
Mm.
I was like, fam, I don't want nobody
To
to
have to
do a
do that.
GoFundMe. And no diss to anyone where it has happened, but it's like I personally know how much it would take to, because I've done my mom's funeral and stuff. I know that it
Mhm.
takes at least, if you at least have 20,000 to 25,000 saved somewhere, you can bury
You can
someone.
handle the final expenses part of things. Right.
Exactly. But
But I just
if
want
it
to
comes
sorry,
to, hmm
I just want to touch on one other thing, just on why you should possibly have insurance. Because
hmm
insurance doesn't have to be just about insurance. It could be an asset class,
true, true.
right?
Oh yes,
Most
yes.
right? So most people kind of lose sight of
Hmm.
what a properly designed policy can do for them while they're alive,
Yes.
outside of just providing the death benefit to when they're dead.
Sorry, I say the asset class. It could be an
Yeah,
asset class.
absolutely.
Trying to write this out. Different type of. Mm. And do tell. Let the folks know. Or sorry, what is an asset class? We gotta educate the
Mhm.
people a little bit. So.
Well, an asset, by
Mhm.
definition, is something that provides you income or goes up in value, right? A
Correct.
liability is one that takes away your cash flow and goes down in value.
Mm-hmm.
So, with a life insurance policy, specifically talking about a permanent or participating whole life or a UL policy designed properly, can be an asset class where it can provide you an income stream
Mm-hmm.
while you're alive, while you are funding money the same way that you put money into your home. A home is considered the big asset class because of why you put money into it, and it hopefully it appreciates in value. Well, the same
Mm-hmm.
way a life insurance policy does the same thing. You put
Okay.
money into it and it goes up in value. Now, how you access that value is entirely up to you. So I
Mm-hmm.
say asset class because it's not an either or thing. It's another one that you can add to the tool belt.
True. I know there's gonna be a pushback because this is gonna be part of the battle.
Yeah.
So when it comes to you said UL, right? Yes. 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 So whole
Mhm.
life or UL, there is a part of it where you're able to get um cash value.
Yep.
So you're able to take it out, borrow it, and folks, do not quote me on these things.
Oh, I'll quote you. I'll
Okay.
correct you if you're wrong. No,
'Cause I was like,
oh,
ooh, I don't want to say it wrong. And then people are like, oh, I heard this like one clip from Camille. I'm like, no, 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 stop
no,
this.
I'll correct you if you're wrong. Okay.
So you're able to borrow from that, or it's able to add value from like investing and stuff. Is there a certain period where you can't have access to that cash
Uh,
value?
no, and
Okay.
that's why I said properly designed,
Okay.
because
Okay.
right, keyword is properly designed for a purpose, right?
Mm-hmm.
Most people don't understand that life insurance can be crafted the same way you can build your own house.
Mm-hmm.
Depends on what you want to focus on, right?
True.
So if I was sitting across from you and I'm saying, hey, what is your intentions? So what are your wishes for this policy? Well, I want to be able to access the cash value in my retirement. So then,
Mm.
right? So then I would craft it to have to make sure that the bulk of the growth is on the tail end. But if you
Okay.
said to me, you know what, I want to have access to the cash value within 15 days. Okay, we can do that, right?
Okay.
Right. So again, a proper advisor and a properly designed policy can fit the structure that you're looking for it to do. So you can
Okay.
access your cash values in your policy as soon as it's settled within 15 to 30 days.
Cheap. Did you hear that, folks? Golly. How? Or well, no. You said create. You have to craft it in a way. So basically, what I'm hearing is based on how they have analyzed the insurance that they want, and they're able to advise how they would want it, is we are able to craft it in a way that they'll be able to have access. That's big. That's
It
big.
is. It is. If you look at any insurance carrier's website, they'll
Yes.
have tons of different solutions for different problems, right?
Hmm.
Funding your child's education, whole life insurance, having an insured retirement plan, whole life insurance, right? Having the infinite banking concept, whole life insurance. So all the one product is
Yes.
used as a Swiss Army knife to solve different issues and problems, right?
Mm,
Where it gets dicey and where people get kind of think it's a scam is where they'll go buy a regular old whole life policy, right? And say,
hmm.
"Oh, dumped all this money into it. I can't access it until year 5, or it doesn't really show any true growth until year 5, year 8."
Yeah.
And then throughout that time frame, they feel like they've been scammed.
Mm,
That's why most people feel that way about using insurance as an asset class. But if designed properly, you definitely can be an asset class.
okay. Oh, whoa, breaking news, folks. Because I've always seen like different folks talking about it, and I'm like, is that like is that true? And
Mhm.
ooh, I believe you spoke about it. Infinite banking.
Yes.
That's the basic concept that you're mentioning. How is what's the concept of that? Because I think that's something that people aren't the words coming around on social media as of
Hmm.
late, and maybe I want to say personally I've heard in the last 5 years, but I haven't like really sat down and cracked open a book to get the better understanding. So how would you be able to explain it to someone that's heard this word but they're not sure what it's about?
Mm. Great question. So the concept itself is really, I kind of break it down like this. It's a way for you to change how you move your
Hmm.
money around yourself. So paying your bills, your savings, that allows your money to grow twice. So,
Okay.
okay, so if I was to ask you, how are you currently saving now? And how are you currently paying your bills? And how are you currently making your purchases? Right? That
Uh-huh. Okay, I
right?
got I
No,
thought
I'm
you were gonna
asking.
ask that.
We'll play with
Okay,
it.
so
So,
so right now I am with my business. I have a savings account, I have an investing account. I pay the bills through
mhm,
um business expenses are through the business account. I transfer money to my personal, so I'm able to pay my personal things as well,
mhm.
and then save as well, and then invest.
Okay. So what you just described was a concept.
Mm-hmm.
It's a
Yes.
circle. It's how you are moving $1 to here, another dollar to here, another dollar to here. The infinite
Mm-hmm.
banking concept is the same thing.
Okay.
All it's basically asking you or promoting you to do is to, instead of where you're saving your money right now,
Yeah.
insert an insurance policy.
Okay. Okay.
Okay. So let's just say you have your money, you made your money, you put it
Mm-hmm.
into XYZ savings account.
Okay.
Okay. Instead of putting into that XYZ
That's what
saving account first, put it
yes.
into the policy,
Okay.
and then you can take the money out of the policy and
Mm-hmm.
then deploy it to where you want to deploy it anyways. So
Okay.
by doing that, let's
Yes.
just say you put it still put into the savings account, but
Mm-hmm.
now you have your money growing in your policy by
Yes.
way of interest and dividends, and then you have your money growing into your savings account by way of your interest. So you still have accomplished what you wanted to do, but
Just
the
using these.
concept itself is where you save your money and
Mm-hmm.
allow it to compound tax free twice for you. So the
Okay.
concept itself is just about how you move your money around. And then on top of that
Mm-hmm.
is two, how you pay your bills.
True.
Because if you pay your bills from your earned income or
Mm-hmm.
you pay your debts, then that money's gone,
Yes.
right? But if you can do the same thing from the money that's in your policy, you
Mm.
still accomplished paying the bill, you still accomplished paying the debts or making that purchase, but now
Yes.
you can pay yourself back inside your own policy and recoup it while your money is still growing. So the
Okay.
concept is just kind of getting you to think a little differently about how you want to move your money around yourself.
So what I'm hearing is it kind of the same concept as having a non-registered account where you get dividends and capital gains, and then
Hmm.
whatever money that you're using from the dividends, you pay
Hmm.
your bills. It's the same.
Very similar, very
Okay.
similar. But
It's
the
just
only
that
difference is that once you've used that money, it's
mm,
gone,
gone.
right?
Okay. Okay.
Whereas in this regards, once you
Hmm.
take the money from the policy, the money is actually never really taken out of your policy. The money is still there, growing tax
Yes.
free, compound over time. So your money is actually working twice for you.
Yes. Okay. So now the head's turning. I'm like,
The head's
okay,
turning, the
okay.
head's turning.
So okay. So with something like this, I think now folks are like, how do I get this? How much does it
Mm,
cost?
hmm.
So, and I think that's the main thing with the difference between each cost of insurance. So, how much is the cost to be able to access this infinite
So
banking?
that's where I think most people get caught up
Mm,
in where the misinformation is because people go into it thinking
yes.
that it's like a bank account, and it's
Mm,
not a bank account. Okay.
hmm.
It's not just as simple as opening up another high interest savings account. You
Yes.
are entering into a contract with an insurance
True.
carrier.
Yes.
So there does need to be able to qualify. But if you can't qualify, it can be
Hmm.
somebody that you have an insurable interest in, could be a child.
Hmm.
Um, right? But it has to be again a contract. There has to be a need for the insurance, some way, shape, or form. And
Okay.
then two, how much you can put into it is the same amount as how much you ability to save. So
Fair.
if I was to ask you how much are you able to save per year, and you said
Mm,
$5,000, I said,
yes.
okay, well, let's look at what that looks like having that in your policy. So you don't have to put anything more than what you're capable of. but
Yes.
you can put as much as you
Okay.
want that makes financial sense. Either you're a
That's
business
important.
owner or it's personal.
Yeah. And that's important. I'm glad you asked those questions because the misconception is that, like a term is one third of what a whole life or a universe is. So that's what kind of steers folks away. Guilty. But if now the question is there ever a time when having both is okay?
Well, I use term and whole life in my designs all the time.
Boom, bam, bam. Okay, so say,
That's what I said. It's not an either or for me
yeah,
because here's why. Because most people think, okay, whole life is expensive. We know that, right?
hmm
So if you were going to try to put $5,000 into a whole life policy, you may get 100 grand of insurance. But let's just say
yeah,
your insurance need is 700,000 because you have a mortgage, right?
mm,
I'm
all
combining the
good with the
two. I'm
mortgage.
combining the two to make
Yes,
sure that not only your insurance need is covered, but you're also getting the benefits of the whole life and the cash value growth and all that that comes with it, and it being paid off in a certain amount of time. So combining the two is the best way that you can have the best of both worlds. And again, properly designed allows you ample space to put money into your policy at a much lower cost of insurance.
nice. Best of both worlds combo. Boom, bam, bam. I let. I'm glad you mentioned that because again, we're decoding misconceptions that are
Mhm.
spoke about in life insurance. See, y'all are getting some
Right. I
secret
try to give
sauce.
you some nuggets. And another thing too,
Yeah.
another thing, I just had another case that I just worked on where
hmm
a lot of the times people are afraid of the commitment of having to pay
Mm,
the amount
yes.
of premiums all the time,
hmm
right? Well, policies can be crafted so that you have flexibility that you're not always having to pay a high premium if you can't afford it.
Okay.
So in an insurance policy, there's going to be the base or required premium, and then there's what we call as the extra deposit option, whereas gives you the flexibility to say, you know what, anywhere between this and this, I can have some breathing room as if I'm financially strapped. I don't have to pay a large sum of money if I don't have it, and then run the risk of losing my policy. So
Yeah.
again, it really is important to make sure that you're speaking with the right advisor.
And with that, what is the percentage of folks that
Mhm.
had to use that during the pandemic, like deep into pandemic, because
Use their
kind of out.
policy, use their policies. Large,
Mm-hmm. Mm,
large amount of people. A lot of my clients, their cash value policies, they didn't even know that
yeah,
they could use it. And when I said to you, it's like, hey, you have $5,000 in cash value, you can
yeah,
access
yeah,
and not have to worry about rushing to pay it back. You can cover those certain debts that are people are knocking on your door and relieve that pressure, and then
yeah,
take your time to pay back what you borrowed from your policy. It's like, I can do that, and it's
yeah.
like, absolutely. So for those who had it,
Mm-hmm.
you know, their future
Yeah.
self thanked them for putting it back, right? So I always try to say, try to make decisions that your future self is going to thank you for.
Mm, mm. Hold on. You got to say that again.
Try to make decisions that your future self is going to thank you for.
That your future self. Well, thank you. True, because um, I like to say that that when it comes to personal finance and
Hmm.
yeah, personal finance or financial literacy itself, it's all about making those decisions that like yourself in your late 40s, late 50s, late 60s, like you
You know
did
this, right? Right?
that.
You know this,
Yeah.
right?
And that's actually like one book that I have. It's Get Good with Money by
Hmm.
Budgetnista. and
Okay.
she has like this concept like, oh, create a person like your 60-year-old or 70-year-old person, and just
Mhm.
like every time you do something wise, a wise decision, yo, they're just on the beach, just kick, relax your life.
Kicking it back and look and say, you know what? That was smart.
You did that. You're the reason. And sometimes you have to have a dream of your future, right? So
I like that.
I'm glad that folks were able to utilize that. And it's fortunate that some did lose it because of the pandemic, because like it times are hard. Life was lifing.
Hmm. Hmm.
Life is lifing, right?
And we both know
And
that that's one of the first things to go,
yeah,
unfortunately.
oh, true,
And I
true.
want to ask you that question. Why do you think? Because this was always my biggest,
That's
not
a
pet peeve, but
mhm.
I was always trying to say, you know what? Why is your insurance policy the first thing to go when things
Oh
get
my gosh.
financially difficult?
Okay, so my thought processes, the the cost. So like let's say if it's like $200-300 a month. They think that's something that, if I take a pause on this, I can always get it
Mhm.
back at that same amount. And let me
Which we
tell
know
you
not to be
this,
true.
folks.
Which we know
Listen,
not to be true.
listen.
Right?
If y'all had car insurance and you're got suspended or something, when you try to renew that,
Hmm.
the the
But
the
that's an
number.
acceptable risk, though, and that's where to me it's I kind of find it kind of funny sometimes is where people will take that risk on their car insurance or their home insurance, um, and pay that extra money, right? But they won't do it with their life insurance.
That's why.
There seems to be a mental block of
Hmm.
where insurance becomes not valuable anymore.
Facts. And that's scary because that cost, it can double up, right?
Real
Or
fast.
especially if it's a whole life, right? And actually, no, even if it's term
Even
and like,
term is the
yeah,
worst for that. Term,
especially,
term is the worst for it. You know how many older clients I've had who've had their little term policy, let it
10
ride
years.
out, right? Come to renewal. I said, what is why why the thing? And I was like, yo, I had to explain to them, you got term insurance, you're older now, and this is how term insurance works,
I,
right?
I, I want people to listen. I want you to listen carefully. Look at me. Look at me in my eye. Do not get 10 years. Do not
Oh,
get 10 years. Do not get 10 years. I
don't
don't
get 10
care.
years if you plan on just sitting on it. If you have a plan,
Yes. I
okay,
mean, young. Like, okay, like a person like our age,
yeah, no,
unless
there's no
there's,
need.
and I can't even say unless there's a history, but even if there's a history, they'll be like, "Whoop,
The only time I've done a 10-year is affordability
mm,
because that was the most cost effective way
yeah,
to get them what they needed or wanted, right?
yeah,
And the only way you're going to get that is doing a 10-year, right? That was,
fudge.
or I do a ladder approach, but
Yeah." Ooh,
right,
a ladder approach.
yeah.
Okay, what is this? What is this? I want to
So
hear
the
this
ladder
one.
approach is going kind of in my mind is going 7 levels deep into when the actual risk is gone, right?
Okay.
Right. So we're buying. So this is going back to just the true purpose of insurance now, not the cash
Yeah.
value and all that stuff. We're just talking about strictly. So you have an 8-year-old.
Hmm.
The true risk of you dying prematurely from that kid's 8 years old until they're 25
Hmm.
is what? And you have your education costs, you have your income protection, right? You have everything that if you would pass between that time frame, you need this amount of money to
Mm,
provide for your child or whoever's going to take care of the child to provide that lifestyle, right?
yes.
Boom, we have that certain amount of money. Then
Yeah.
we go down the next tier saying, okay, you may have a debt that
Hmm.
is 25 years. You want that covered off. So boom, we have that type of, and then we have any long-term type of expenses, whether it could be final expenses or death, or it could be just something that you want for a longer period of time.
Mm-hmm.
And in that way, we're laddering the coverage. So instead of just buying one bulk of, say, $1 million, keep it simple. We have now
Mm-hmm.
broken $1 million into the specific time frames of when that risk is actually gone, right? Because
Okay.
you
Okay.
don't need the $1 million for the full 30 years. You only need it for certain periods of time in your life. And that's using the ladder approach, and that brings down the cost significantly.
Mm-hmm. Yeah. What? I never hear this one. Secret
It's,
sauce. There's some
yeah.
secret in that tea, you know.
I got the good stuff, the good goods.
That's okay. So I'm loving this. So we've learned about the different or decoding infinite banking, the ladder approach, just and trying to understand why folks would
Cancel.
get rid of their cancel it.
Mm.
And I just think it's just like you said before, like they don't see the value in it. They just see like, yo, there's other things in my life that I need more.
Right now. Yeah.
And it's sad because we're still living in this instant gratification lifestyle, and it's like, yo, I feel like anyone our age should actually be having life insurance because they've seen like when they were a kid and they saw like with young friends passing or older elderly folks passing, and they saw the struggle. So why not have life insurance? Like unless like the thing that you said, like if there's no one there that they need and they don't want to donate it to, cool, and you don't have any assets, then cool, let
But,
CRA take the
but
thing
even
there.
then, that to me is even. And again, it depends on when the conversation is happening. Because if
Hmm.
you're 40,
Hmm.
right, and you said, okay, I have no kids, don't own a house, don't have no debts, okay, okay, but I'm never. You can't tell me that you leaving money to your parents, your brothers, or your sisters wouldn't.
It's not beneficial.
It's not beneficial, right? Unless you don't care for them at all. So you got to be. So if you're that type of individual, then I don't want you as a client, anyways, right? So so it's a mute.
Well, then, you have how many people?
Right?
And you don't want to leave nobody nothing.
Nothing, right?
You
Like
don't
if
have
you
any
don't care
niece or
about the people
nephew.
who care about you, then maybe we're not meant to do business, anyways, right? So I'm not there to
Okay, but
convince you.
you
I
okay.
don't even bother. Listen. I am not about trying to make a horse drink, right?
Oh, you don't want to drink?
You know
All
what? You
right,
don't want
say
it? Okay,
less.
cool. Right next, because guess what?
Right?
There's a
Hmm.
mother, there's a father, there's an auntie, there's somebody right behind you that says, you know what? I want to leave something behind. Okay,
Exactly.
let's have a conversation. Um, so if you already
Like
tell me I don't need it, then it's like, okay, you don't need
that's
it.
true. You know that's absolutely true because like obviously single and stuff, but I'm thinking about like my nieces and nephews and stuff. I'm like, no, I would want to leave them something, and then like brother, dad, grandma,
Muddy,
brother back
muddy,
home. Like
somebody, right? And just think
they're
about this.
exactly.
And I always said this to people. I was like, okay, when you're gone, what is it that you want people to say about you? We hope everybody says nice things, yes?
Them better.
Right? Well, we're hoping. That's what we want. That's what everybody says, and I want to say like he was a loving,
Mhm.
da 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 da, all the way, all the nice things and all that.
Yeah, yeah.
I've never heard anybody complain about getting money. So, so if you want to guarantee it, leave some people some money.
You know what? No, you know what? She was so nice. She left me
And
a
she took
little
care of me,
petite
she
of
no the
chocolate.
white chick. Hey, here.
Not that way. But ooh. So another thing to a misconception I want to acknowledge because I think that was another question. And what percentage of people actually get the death benefit when the person passes? What's the
Oh,
percentage? Because I
that's a
think
great.
that's one thing that a lot of
So
people
on
don't
whole
see.
life, it's guaranteed, right? It's permanent.
Okay.
As long as you pay your premiums, it's guaranteed. On
Okay.
term,
Hmm.
it's a little bit under. If we're going to look at out of term policies sold, how much of the
Hmm.
death benefits get paid out, not because it's declined, but just how people outlive their term policies, it's about
Hmm.
2%. It's about 2%.
Wait. Did you just tell me that
Hmm.
2% of folks that have term insurance,
Not 2% of folks. Out of
or sorry,
2% of term policies sold,
sold?
2% of, let's just say it's $1 billion of death benefits that are sold in term policies. 2% is actually is the average that gets paid out because people outlive their terms and no longer keep it past their term. So
Okay.
term.
Okay.
So
Okay.
you're really asking the question: how many people die prematurely,
Mm,
right? Because now we're
mm.
talking about a premature death
Yes. Yes.
before they had a time to live their life, unwind things, and all that type.
See,
So insurance companies love term insurance. They absolutely love it, right?
yes, keep them coming. Yes. Yes.
Right. So
Please.
it's kind of like the bouncer at the door,
Hmm.
right? Sometimes you gotta grease the bouncer's hand to get past the line. Well, two 2% allows you to get in the door. You know what I mean? Term insurance allows you to get in the door, but once you're in the club,
Yeah.
you can move around. You can go to different rooms. You can do certain things. You can convert that term to permanent. You can, you know what I mean? You have some options available to you. So term is always a great starting point. It's better than nothing, right? Absolutely. Um,
True. True.
so that's my point.
When should someone turn term into whole life?
Oh, that's a beautiful question. Hmm. I'm gonna say one, affordability.
Okay. True.
Okay.
True.
The earlier you can do it,
Hmm.
the better, as long as you can afford it.
Hmm.
Um, and then two, it's really once you kind of understand your financial picture in the end, right?
Got it.
So,
Yeah.
what is that possible capital gains tax that you're going to have? What is that tax liability? How much do you want to? How much do you truly want to leave as a legacy? What does that picture look like?
Yeah.
Then once you can know and understand that, and then again have the affordability side of it, then that would be a good time to start looking at converting.
Mm. Mm. I like that. And I know our of us 40-year-olds are looking like,
Hmm.
yeah, man, must. You know what? For the folks that have term and they're in their 30s, 40s, it's probably ideal to look at the transitioning, especially because ideally that's when we start, we start to see real money
Hmm.
come true.
Yeah, you're
And
in your career. Yeah.
yes, and you want to secure your life, family, and estate, especially because you
So the
know what?
earlier you can do it, the
Exactly.
earlier it can be paid. And it could be done and secured with. So when you reach there, you're not having to pay it those premiums then, right?
True.
Some people leave it to the last minute of 60s, 65s, and then the premiums are high, and then
Yeah.
when they're continuing to pay, even if they can pay it, I'm not right. They're still continuing to pay that premium until
Mm.
that time comes. But if you can do it early, again, your future self, your 65-year-old who are saying, I'm glad I did it when I was in my 40s, so I don't have to be paying these premiums in my
Yeah.
60s, 70s, right? So it's always worth looking at
Yeah.
when a good time is early.
Jeez. And so to the folks, especially y'all that are in your late 20s. Because remember, once you turn 30, the knees mash up.
Yeah,
So your body turns different, you know? You
I
start
think
thinking
it's
like,
40s
oh
now. I think it's in the
no,
40s. I think the 40s is the new 20s. No, isn't that what they said?
no, absolutely not.
Mm,
Because my knees have been mashed up since once 30 hit, I was like, oh my gosh, like this is wild.
mm, mm, mm,
Woo.
mm, mm.
And what's your thoughts about disability insurance? I'm just adding that one, the secret one. Because that's
That,
that
that to
one.
me is kind of the redheaded stepchild of insurance.
Hmm.
People forget about
Redhead.
it. That one get dash way. That that's, nobody, nobody really thinks
Who,
about it,
who's that child?
right? Oh, you okay? So,
I like that saying. Holy smokes. The red-headed child. That's forgettable. Oh my gosh, that's a good one. Jeez, yes, because I listen.
stats say that you will have some type of occurrence that limits your ability to earn
Mm-hmm.
before you die, right?
Yes,
You
yes.
may have a greater chance of something happening to you like that. So whether it
Mm,
be through a serious illness, which would be critical illness, or an injury or illness, which would be your disability.
mm-hmm.
So talking about, and I kind of wish they made disability insurance a little bit more easy to understand and actually to sell in the designs of the policies. I think they've made them a little bit restrictive or very,
Mm-hmm.
very restrictive.
Yes.
um, it's not easy for an insurance professional to actually explain it to
Mm,
somebody where it's like, you know what, this
typically
is,
use it like this.
there's so many coins, there's so many this, there's so many that, there's so many what you do for your work. There's a lot of different factors that go into disability insurance. But
Yes.
do I think there's a need for it? 100%. But if you're a professional like me and you, right,
Mm-hmm.
who are self-employed, then and we don't have anything to fall back on that's going to provide that income if we're laid up for an extended period of time, then
Or migraines.
right, the gig workers, all that type of stuff, then
Hmm.
disability insurance has a place.
Yes. So I'm glad you mentioned that. So for business owners, self-employed folks, you really want to consider it. Consider this red-headed child,
Yeah.
and even for the folks that have disabilities, because I'm becoming more mindful
Hmm.
about folks that aren't able-bodied like us,
Hmm. Hmm.
that they're be able to have the covers of like life insurance and disability. So always getting that information as quick as possible is ideal. So you're able to cater to the folks.
And
It's like,
I want to make this crystal clear.
hmm,
Insurance is a before the accident product.
correct. Yes, yes.
Well, a lot of people will say, you know what, well, not will say, but
Hmm.
once the house is already on fire, the insurance company is going to be less likely to want to insure it.
To be
So,
like,
right? So if you already have cancer, don't be looking to get cancer insurance. If you've already or have going through a disability or a
hmm,
sickness,
yes.
most likely the insurance company is going to exclude that particular coverage of what. So the earlier, and this is why we as professionals try to get to individuals before these things happen to transfer the risk of that said thing. Um,
Facts.
right, and then so it's really upon us, the professionals, to make sure that we are talking to these people before they occur.
Hmm. And even for, so I want to like make this PSA. Folks, if you have children or if you have like family members that, you know, that it runs in the family, you want to make sure you guys are
Mm,
secured.
great point. right? Because that's a question. That's a question on an application. What is your
Yeah.
family history, right?
And don't
Again,
lie.
it's a contract. It's not worth lying. It's definitely not worth lying. But they want to see, okay, what is the chance of the likelihood of you happening? And it's not to say they're not going to cover you because of auntie or mom had it.
Yeah.
They're just saying, okay, you know what? Now we know. Now we can
Mm.
underwrite it properly and recoup the proper premiums to assess this risk.
Jeez. And for the liars, them. What happens? What happens if you tell a
Mm,
fib
mm.
on
Or a
your
non-disclosure or something like that. So it could not. It might not even be an outright lie. Could be
mm,
just you just didn't mention it, right? So most policies or life insurance has a 2-year contestability period,
Oh,
right? So if you pass away within the first 2 years, the
yes.
insurance company has the right to go through all your medical history, especially if
Mm,
it's a weird circumstance. Like if you just bought life insurance today and then die of cancer a year from now, and you didn't mention anything, right? Then that's good. That's kind of like, so,
like
and
a
people are like,
little red flag.
you doing the Kermit, they'll be like, right? So, so, so they have the right within the first 2 years to
Yeah.
contest. It's called contestability. So they will go through all your medical history. Now, if
Yeah.
you die of an accident,
Mm,
then that doesn't come into play, right? Because you died of an accident. But if
see.
it's of a medical thing, then they have the right to go through it and contest it. Anything after the 2 year period, you're pretty much, I'm not going to say 100% guaranteed, but you're
Mm,
pretty much a good chance that they're going to end up paying out anyways.
true. But
Be-
yes, and that's true. And trigger warning, sorry. If you have committed suicide or unalive yourself, I think that's
Unalive,
the
right? Yeah.
unalive within the
hmm
2 years,
hmm
it's you're not going to be able to receive
You're
it.
not going to be covered, right?
Okay. And I've been watching too many documentaries as of late.
Those murder
Even though
mystery ones,
especially the worst roommates or some ish like that, like they're the spouse or
right?
roommates are trying to done off their significant other.
For the insurance claim, for the insurance coverage.
Yeah.
Yeah, yeah.
So those are not covered up. Yeah. So people.
Well, if you were the beneficiary on that
Mm.
policy and you were the said person who committed the crime, oh, then no, not gonna pay you the benefit.
So you'll be locked up. They won't let you out. So
No,
folks, please, it's not worth it. Okay. I'm.
the-
It's actually wild how many of these cases are because of
of life
they want the
insurance.
life insurance. I'm like,
Yeah.
that's wild. So
Mhm.
please.
Which goes to show you that the only reason why people would do that is life insurance has a good track record of paying out. So,
Mm,
right? So,
true, true.
would you do something that doesn't have a good track record? Probably not. So, so, so
But,
that
but
should,
the
that should give you
probability.
that should give you a good indication of, yeah, okay, life insurance policies do pay out their claims.
Okay. So folks, don't be scared about life insurance because they do pay out unless you're part of that 2%. But sometimes outliving is kind of good, but having the both
Right.
is way better because it's a balance, right? And you have so much knowledge. And I know you've
But here's the
been
thing. So let
saying,
me ask you this,
mm,
Camille. If
yes,
somebody said to you,
yes,
all right, I have enough money,
yes. Okay.
right? I have enough money.
Hmm.
Would you still suggest for them to have insurance?
How much is enough money?
Or I'm talking about millions. Let's just say they have 5 million, 2 million, 3 million, but they're good. So they're liquid enough to say, you know what, I could pass it down liquid. Would you suggest that they buy life insurance?
You know what? A part of me would say the same answer you said before,
right?
You probably don't need it. However, there is a high possibility that a lot of your estate will go to the will be taxed
Okay. Yep.
unless you have like a plan
Mm-hmm.
to don't to give away some of that money, especially if
Mm-hmm.
you're in Canada, because in the States it's different. Give away some of that money before you hit the bucket, kick the bucket, and
Mm-hmm.
that's ideal. Because I've seen that where people are like, I have enough money, I don't need life insurance. I'm like, bet, as long as you give away some of that money before you kick the bucket. That's my answer. How would you answer?
That was
You're like,
good. That was good. No, that was good. That was good. And
yeah, okay.
I wouldn't say anything different. I would just say, okay, well, how would you like to enjoy it now? How would you like to spend that money
Okay,
now? Right? Like, just
that's
imagine
good.
if you didn't have to keep it there and you can spend it.
Yeah,
You can go on your vacations. You can give it away. You can do that now while you're
true.
alive,
Good.
knowing that the money's going to be there in the end
Yes.
anyway.
You,
Would that make you, somewhat
because I'll tell
slightly,
you this.
somewhat slightly happier? If it does, great. Then let's have a conversation. If it doesn't, you don't need it.
Yeah.
Mm.
I personally have seen them type of
Mm-hmm.
accounts, and I'm like,
Yeah. Yo. Seeing is believing. Like seeing it, like when you see it, there's nothing like actually seeing it and knowing that it's real.
so when I tell people, yo, stop busting your ass and try to start investing,
Mm-hmm.
it's because I've actually
You
seen
see it.
it.
People have it.
So when
People
you're
have it.
50, 60, 70,
Mm-hmm.
you're going to be laughing at yourself. You're like, wow, all this time I was worrying. But, I listened to Camille, I listened to Andrew on
Right.
what to do. So I'm having more of peace of mind throughout
Mm-hmm.
my older years and things, right? And I like
Right
to
back
ask
to the
folks
fundamentals. Go
this.
ahead.
What are the three things you wish you knew about personal finance when you're, before the gray hair and things, when you're younger, when you're a
Mm-hmm.
youth?
Mm-hmm. Mm-hmm.
What did you wish?
Um, I wish I really understood debt early.
Mm. Mm-hmm.
Uh, I think because that's what put me behind a big, big eight ball when I was younger. Like massive, massive. I spent years trying to undo debt issues. Um,
Yeah.
and then understanding it and then understanding how to use it as a leverage vehicle. I wish I understood um, planning, right? How to
Mm.
how to actually financial plan for my life, right?
Yes.
Get a clear picture of what I want my money and get it working for me early. I know I was always a great saver, but
Yeah.
I always saved for a specific goal to buy or to spend or to achieve something, and then the savings was gone, right? So
Mm.
yeah, I'd probably say those planning, debt, and then getting my money working for me.
Okay. True. And getting see, I'm gonna tell people each and every time. These are the main things that folks mention, right?
Yeah.
And it's when you hear the same answer continuously,
Hmm.
it just shows you that, all right, folks, start doing these things. Why I gotta keep telling you?
And
Why I have to
consistently.
keep telling y'all?
And
Yes.
consistently too. It's the time and consistent factor trumps everything. Even if it was 20, it doesn't get it trumps the amount actually because
Yes.
25 trumps 100 sometime ish. 25 every month trumps 100 sometime ish. every day of the week,
Mhm.
right?
Mhm. Absolutely.
so so I think if there was
It's
one simple habit that a
yeah.
20-year-old could do,
Yes.
$25 a month or $25 every 2 weeks, and you will have a fantastic retirement.
I love that. Start a healthy habit of saving. I always say that get the habit of saving, so then you'll be able to graduate into investing, right?
Hmm.
Um,
So
what
how do you
about
think? So let me ask you a
okay?
question.
Yes,
That
yes, yes.
graduation, okay? So
Hmm. Yeah,
how do you describe that graduation phase? Like, what is it going to take for somebody to graduate into investing?
that's a great question because it took me a minute. It took me a long time. So I started investing properly 28. And this was I was always saving, same like you, saving and paying off something or going
Hmm.
on a trip and stuff. I'm like, what? This is
Hmm.
a watch how saving is nice. But
Hmm.
then I acknowledged it that investing when it was 2008, and I was
Hmm.
like, yo, this is the perfect time to start investing. Didn't do it, but I was always talking with someone else, right,
Hmm.
about doing it, like someone like a friend of mine that I went to school with and stuff at university. Yo, we linked up 10 years later and they're like, yo, Cam, my 2,500 that I invested turned to 10K. And I was like, okay, okay, you don't have to tell me anymore. I, I understand because then you look back and you see, okay, it's like anyone that has whatever phone you have, whatever company that you like pay attention to, look at it 10 years ago.
Mm.
And that will
Hmm.
just show you, unless it's BlackBerry. Don't look at BlackBerry.
Ooh,
Don't look at
ooh.
or don't look at what's the other one? Enron.
Oh
Don't
God,
do those.
no. There's some bad, and that's the thing about investing. Why people shy away is because for every win, there's like about five losers, right?
Exactly.
So, so people say, well, okay, what if I fall into the loser category? Well,
Well, then be safe and do the
you keep
S&P
trying again,
500.
right?
And if that case, just be safe and do the S&P 500. Like that's the one where you'll get that. It's like the snowball
Right.
effect when you're paying off debt.
Hmm.
Just go into something that you see for the last 40 odd years, it's been increasing. Yo, let me just put
Where
my money
I've where I fell victim
here.
to investing, right,
Oof.
is
Which one?
I had early success, and
Mm-hmm.
then I got humbled on quite a few stocks.
Which stock humbled you the most?
Huh?
Which one humbled you the most?
Well, I got humbled in the whole weed hype.
Ooh.
I
Listen,
got
that's another story that I
I,
like.
I got humbled on the weed hype because I was saying I ain't missing this boat. I missed too many boats before. I ain't getting stranded on. I ain't getting stranded on another island. Right?
You're
I don't
right.
want to be. I ain't trying to be Gilligan. So I got humbled on that whole weed debacle stocks, right? But my saving grace is that I had some the companies that I bought early were stable companies,
Okay, and that's ideal, right?
right? So and then I was just like, man, I lost my momentum. I ain't gonna lie, because I went for that quick win. I went for the quick win. I got
Right?
greedy, right? And I think that's where investing now becomes kind of like a slot machine
Gambling and getting stuff.
mentality. And that's why I asked you specifically the question of the
Yeah,
graduation, because we all graduate somehow. Some
exactly.
people, right? Some people actually make it successful and some people fall through the cracks. So the
Yeah.
graduation phase is like, okay, what is it that you should hone in on when you're trying to graduate to investing? But that's another conversation.
right? Because I love investing too. But like when it came to graduating, I did the weed stuff. I did the weed stocks too.
Hmm.
I had my humble pie as well.
Hmm.
I also had to what you call it? I think, oh, of course, my dog wants to talk too, because I
Yeah,
didn't do any stocks with pets. Um, it was when I did the stable ones like AMD and stuff. That's why I always call it my boo
that's
thing.
my baby. That's my baby. Hey, this is my
So,
baby.
okay, so did you get AMD the same time you got the weed stock?
No, no, no. I had AMD before the weed stocks.
Dang, because I
I
got it
had
at the same
I have
time.
AMD at $14.
Oh, I got it at 12.
Oh, but did you cash out?
No,
No, okay.
I'm holding. Me nah let go. No, sir. So
That
this
that
one,
right there is my baby. Oh my gosh. Nobody can tell
so
me nothing bad about AMD. You
right? Shucks.
not
There's other things, and you see how we're getting hype over this. We'll talk about this offline because we don't,
one.
folks.
Not
This is
Jesus,
how
my
you know.
computer soon dead. All right.
What? But also, what are other avenues that you're working on before we let the folks figure out all these gems and start to Google what AMD is and things?
Yeah. All right. So what I'm working on. So right now, going back to, I'm trying to develop a program and a platform and a product, ideally, that will
Nice.
be able to help people
Mm,
when times get rough to support their policy payments. So just think of
mm,
any other credit protection, right?
okay.
I want it specifically designed, whether it be offered by the advisor, so that the advisor is able to offer it to their clients, or it be a standalone product that people can say, you know what, if I can't afford my premiums, there's something there that will help pay my premiums for me, so I don't lose my coverage.
Nice. So it's gonna be like an app type of thing.
It won't be an app. It'll probably have to be a product in itself.
Okay.
But
Okay.
just how it's going to be um, accessed by the public is either
Mm,
going to be through the advisors themselves, or
okay.
or it could be a standalone product that people can buy and protect their insurance policies.
Okay. Watcha. Andrew, you're
Mhm.
doing big things, you know.
All right.
I swear,
So,
anyone with an A is doing big things, eh? Every person I know with an A are doing big things. And how can the folks find you? Where can they contact you? You know, I'm already have it up and ready.
yeah.
Oh,
So email for those shy people. You can email me at info@dfinsurancesolutions.com.
mm,
You can call me direct. Don't have an 800 number, just a good old Selly, 416
mm.
566 5136. I put a link. I'm not sure if that's going to be actually able to be clicked on, but if you want to book a virtual meeting with me, you
Mhm.
can just click the link, meet with Andrew, schedule your time that you want to talk about, whether it be an insurance policy review, you want to ask those questions, what's the best type for me, or just, pick my brain on a certain topic in regards to what we kind of talked about today. Those are probably the best ways. Or, you can find me on the social media channels, Instagram, Facebook, at dfinsurancesolutions.com.
Boom, bam. And I'm definitely gonna put this in the show notes so they will be able to click it. No worries. Well, let me make sure I see of it in a nice section so they're not worried about nothing. But like Andrew,
Mm,
this has been amazing. Like we've been having a great discussion about you actually was able to decode life insurance so people were able to understand, and it's like the perfect month to talk about it because September is life insurance awareness. So I'm so happy that we were able to,
me
to
too.
spread
Me too.
the knowledge.
Long overdue,
And
and everything comes in its time. So thank you, Camille, for having me
no
on. I
problem.
always wanted to ask you, what's the correct pronunciation of your company?
Oh, everyone says that. Fitness IQ. Because it's
Yeah,
always like they see like the fitness is like, oh, fitness is. I'm like, no, 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 it's a fitness IQ.
finance. Well, thank you so much for having me on the show today. Love what you're
Absolutely.
doing. Keep doing what you're doing. I can't wait for your 200th episode, and I hope it's going to be a big
Bam, bam,
celebration.
bam, bam.
So yeah.
You don't know. And also, oh, don't forget, you also what? Second Wednesdays.
Yes.
Every second Wednesday, you have something that come true. You think I didn't know. Oh,
Oh, okay. Yeah. Every second Wednesday,
I've
I
come true. I've come.
get together with Mr. Ray McMillan and his son, Stefan. We do
Mhm.
a morning money conversation at 10:15 a.m. every second Wednesday, and we just kind of have real conversations about how money and the different things going on in the industries and how it is affecting our community. And it's just kind of just a real wholesome type vibe.
I've came through. I've watched and I love it. And it's like three wonderful black men talking about personal finance. It
Sign me
doesn't
up.
get better than that. It doesn't get better than that. So, Andrew, thank you so much. Is there anything you want to say to the folks before we leave? Because we're gonna
No,
give
I
them a
just want to
nice
say thank
vibe.
you for tuning in to Fitnance IQ and
I
many
know.
blessings. And you can,
Thank
reach
you,
out to me
sir.
anytime.
Yes. So make sure you guys like, comment, share, subscribe, tell a friend to tell a friend, and remember, I am still doing this challenge, and someone's gonna be a winner. I won't. You won't. You'll find out Saturday, Sunday after. You'll see it in my things and stuff. So big up yourself, all right? And then until that, and we'll see you next month. All right. Peace out.
Financial literacy, knowledge is a must. So link the flip boss, watch the result flash, and watch your life change. And for your better cause, you have a business or a plan and want to make it. Yeah, flip and floss, are the one to manifest it. Yeah, and if you want to better manage all your credit, call the boss. Flip and floss, no doubt, then we do it. Yeah, flip and floss, money literacy boss. Yeah, greatness in our blood because we're working for your cause. Flip and floss, money literacy boss. Yeah, boots up your knowledge for your minimal cost. Hey, yeah, flip and floss, money literacy boss. Greatness in our blood because we're working for your cause. Flip and floss, money literacy boss. Yeah, up your knowledge for your